a very warm welcome to Mr. Tarun Katial. Thank you for taking time out for this webinar, for this important discussion on the new labor codes. I'd like to introduce myself. My name is Sumit Sabharwal, and I lead the TeamLeaseHRtech business as the CEO for the business. We are one of the largest HC and compliance and payroll outsourcing companies in India. We've been part of the entire TeamLease group, which is a listed organization, Fortune 500 India organization, and has been in business for the last 20 years. And I'm joined with Mr. Tarun Katial, who actually needs no introduction. But to tell you a few lines about him, he's founded and he's leading his venture, eastworld.com, which he'll speak in detail in some time. Tarun has been, the founding CEO for Z OTT platform, and also the big FM, the business. And Tarun has been in media industry for more than close to 3 decades now, 2.5, 3 decades now. He's been leading large brands in India and in this region. So thanks Tarun for joining us.
Thank you so much for having me, Sumit. And I think when you spoke to me about doing this together at the start, I thought, why me? Why have somebody who's really largely been running organizations and not running HR from such a close perspective talk about these codes. But when we started to discuss more material around what's happening, I think it's very pertinent for all of us to get involved in this conversation and be cognizant of the fact that we from the top can drive some of these changes so that we can have a better tomorrow for all of our employees, and really as an economy and as an ecosystem that matures to be able to deliver more and more transparency, more and more social security, more and more trust and faith in this economic upswing that we are seeing for the last few decades.
Sure, certainly. And I have with me Mr. Mahesh Kumar, who is our expert for the labor codes. And while Mahesh will run the presentation on the labor codes, Tarun and I will be coming in at the pertinent points.
Hi. Thanks, Sumit. Good evening, everyone. This is Mahesh from Subject Matter Expert Team of HRtech.
So Mahesh, will begin?
Yeah, I'll start presenting it, Sumit. Hope my screen is visible to everyone.
Yes.
Good evening, one and all, once again. And today we are assembled to discuss on the labor codes, which is upcoming labor codes. And majorly today we are going to discuss on the code on wages and code on social security, these two major codes which we are going to cover. And here we are going to also understand the major implication in terms of the financial implication to the all industries because of the upcoming labor codes. So this information we are going to discuss in a detailed way. So this is coming to the labor law landscape. How was the labor, like currently, how is our labor law landscape? And after introduction of the new labor codes, what could be the landscape, how it has the significant reduction in terms of the sections or in terms of the legacy labor acts. So that I have defined in the slide. So currently we are dealing with legacy labor acts, which are 29, the major legacy labor acts, which we are dealing it on regular basis. And this has been subsumed under the new labor codes, which are 4 codes. The 4 codes, all these 29 legacy labor acts have been subsumed, and there are around 1, 2, 3, 2 sections are there, which we are currently dealing with it. Now that's going to be the number, the significant number. The number, it's going to be 480. The sections are going to be 480 in place of 1232. So as I mentioned again, 29 legacy labor acts are going to be subsumed under the new labor codes, which are 4 codes. So this is the overall the labor law landscape, and I have given the comparative the section and in terms of the legacy labor acts. So it's a background of the code, how the code, when the code was the taken place in the bill, when was the bill passed and when was the draft rules issued. So the code is Code on Wages, which is in 2019. 4 acts have been subsumed, which I'm going to explain you what all those acts have been subsumed under the Code on Wages or Occupational Safety, Health and Working Condition. So 2019, the Code on Wages has been introduced. Like the draft rules have been issued on 7th July 2020, and the bill was passed in Lok Sabha 30th July 2019, and they received the President assent on the 8th August 2019. So this was in 2019, and the Code on Wages has, like, though it is not implemented yet, otherwise this has been published in 2019. Similarly, OSH code, we call it as a OSH code. It is Occupational Safety, Health and Working Condition Code. And Code on Industrial Relation, where there are 3 acts have been subsumed. Under the Occupational Safety, there are 13 acts have been subsumed. Under Code on Social Security, there are 9 acts have been subsumed, and all these codes have been published in 2020, which is 2020. And all are having, maybe if you could notice that all the dates are very close by, like 22nd September 2020, where the bill has been passed, and the draft rules, which is the draft rules, central rules, have been published on 19 November 2020 in respect of OSH, and Code on Industrial Relation, which is on 28 October 2020, and Code on Social Security, which is on 17th November 2020. As all are aware that these codes are going to get implemented any point, any given time or any point in time, and there was a news which was running around every corner that the codes are going to get implemented by 1st July. Wherein again, there is a certain reasons where they have not implemented because of the certain states where they have not published their draft rules. Labor codes.
Essentially, these labor codes are addressing the 7 to 8 decades long issues, because when we see that some of the old laws were pre-independent era laws also, which we were following, and the world has changed several times after in last 4 to 5 decades. So it's very important for us to also to see that how with this changing times, the new laws will make more relevance to the employee, to the employers, and as a society, and to the society on a whole.
Yes, Sumit, you rightly mentioned. So the same thing I have captured in my this slide. Like, what is the purpose of introducing the labor codes? And as Sumit rightly mentioned, these all acts are very 60 years old, or 6 decades or 7 decades. So many acts which are enacted in 1923. A couple of acts are there. Similarly, like to rationalize or to simplify and to ease up doing business in India. That's when these codes, where the central government or Ministry of Labor has decided to come up with the codes which will have more the visibility in terms of the doing business in India, and also in terms of multiple definitions. Like we have the definition in terms of minimum wages, payment of wages, gratuity, PF, which has a multiple definitions. So which they wanted to brought it under, like they wanted to bring it under one common definition, and make sure the doing business in India has to be simplified. So that's when these codes have been like the government is planning to introduce. So this is what I have mentioned in this particular slide. And as I've mentioned, the 4 labor codes, how these, like Code on Social, Occupational Health and Safety, the 13 acts have been subsumed. Major the acts are, which is Factories Act 1948, Plantation Labor Act 1951, Mines Act, Working Journalist, and the Working Journalist Fixation. So these are all the major acts which have been has been subsumed under the Code on Occupational Health and Safety, the 13 acts. And coming to the Code on Industrial Relation, there are 3 major acts, which is Trade Union Act, Industrial Employment Standing Orders, Act and Industrial Dispute Act 1947. So these all three acts have been subsumed under Code on Industrial Relation. And Code on Social Security, there are 9 acts. So here again, there are major acts, which is employee compensation, employee state insurance, employees provident fund and miscellaneous provisions, employment exchange, maternity, payment of gratuity. There are more acts which are related to the remuneration, or which are related to the financial thing, which have been subsumed here under the Code on Social Security. And Code on Wages, there are 4 acts, which is the Payment of Wages Act, Minimum Wages, Payment of Bonus, and the Equal Remuneration Act. These all 4 acts been subsumed under the Code on Wages. As I mentioned, there are 29 labor, like the central legislation, have been subsumed under our 4 codes, which are upcoming codes. So this is all 29, the acts have been subsumed.
So on the slide, we can see, how certain trade union acts, which are dated as back as 1926, we are following in 2022 still. So it's almost, close to about 100 odd years since laws that we have been following, and that really comes, as a very welcomed reform from the industry, from the employees' perspective, because the kind of the participation of various segments, whether you call it the migrant workers, whether you call industrial workers, whether you call it the women participation in various levels of the workforce, it has changed phenomenally. So I mean, a very, very pertinent time to actually rework on this, and then see that what makes more relevance to a modern day workforce. Tarun?
No, I completely agree, Sumit. I think look at our landscape around us, right? Where was technology, and where was technology jobs in this era, right? In 1926, where was, I mean, except for manufacturing, which has also tremendously changed because the way engineering has progressed, right? There is really no sector that existed then to now. And while there have been intermittent changes that have been made over the last several years, I think a comprehensive overhaul was really, really required. And I think it's time that we do this, keeping in mind that India wants to be the trillion-dollar economy that it deserves to be.
Absolutely, absolutely, Tarun. Right.
Move on to the next slide. So we are going to now discuss more on the Code on Wages, how the impacts from existing acts to the code, what all changes are going to be there. So which all we are going to go through it thoroughly. So as I mentioned, Code on Wages 2019 has been subsumed with the 4 major acts, which is Minimum Wages Act 1948, Payment of Wages Act 1936, and Payment of Bonus Act 1965, and Equal Remuneration Act 1976. So coming to the applicability, in this slide, we are going to understand what is the existing applicability under each act for each industries or employee. So I have bifurcated into how it's going to be applicable for establishment and how it is going to be applicable for employees. Now coming to the minimum wages part, now existing, it is going to be applicable only to the certain scheduled establishment or industries which have been notified under the Minimum Wages Act. And similarly, the employees, those who are working under the scheduled employments, the Minimum Wages Act is going to be applicable. Wherein in the proposed Code on Wages, or in the proposed code, it is going to be applicable for all establishments. So they have removed this certain industry specification has been removed under the Code on Wages, and it is going to be applicable for all employees and for all establishment, where we will not have any kind of ambiguity or the applicability ambiguity in future. So that is one of the major the change which has been brought in under the Code on Wages, coming to the Minimum Wages Act. Similarly, Payment of Wages Act, the Payment of Wages Act also going to be applicable only for employees, those who are drawing, like workers, those who are drawing 24,000. So this limit has been lifted, and also does not applicable, Payment of Wages does not applicable to all the shops and establishment where they have certain establishments have been defined. So this particular, the threshold also has been removed. It's going to be applicable to all employees. Now the Payment of Wages Act is going to be applicable for all categories, like even managerial, supervisor, all levels are going to be applicable, and this is the major change which has been introduced in the proposed code. Similarly, Payment of Bonus Act. The Bonus Act is a central act and the central rules. However, the code has given the empowerment in terms of the applicability and the threshold limit of the employee's applicability, and at the same time, the employees who's drawing the wages of 21,000, which is basic wages, as per the definition of the Payment of Bonus Act is going to be applicable. Wherein in the proposed code, it has been mentioned that this is the state has having the empowerment to decide on the numbers, whether we can go with 20 or less than 20 to cover more number of employees or to bring more number of employees under the ambit of the Payment of Bonus Act. And similarly, the wages, it is 21,000. Even they can go beyond 21,000 as per the state specific. So they have the empowerment, and there could be after the implementation of the code, there could be change in each state applicability until unless if they are going to go with the same what has been defined in the rule, in the central rules. Otherwise, there could be a change in the Payment of Bonus Act where they have to follow the state specific. So this is one major change which they have brought in. The reason to change this or to give an empowerment to the state is to bring more number of employees under the ambit of the Bonus Act. Similarly, again, coming to the Equal Remuneration Act here, the Equal Remuneration Act, which is currently applicable to male and female. So there's a other gender, which is transgender, also has been included under the Equal Remuneration Act, and they have been provided equal opportunity for all these genders, and they have to be treated equally, all these genders, and in terms of salary for the same position. So this has been brought in under the proposed code on wages. So these are all the major applicability, the change in the applicability from existing to the proposed codes. Sumit,
yeah, I wanted to make a point, and Sumit and we were discussing this a while ago, right?
Yes.
The fact that we've now started to discuss gender equality, transgender inclusion, is just the starting point in acknowledging the fact that there has been years and years of discrimination between men and women around wages, right? And this entire movement of equal pay for women across the world. You should read this book, and I would urge all of you to pick a copy, called Invisible Women, right? And it's a book that talks about how data for several years has been very unfair to women, right? And why do these discrepancies in any part of our life happen between genders? It's because at the starting point, or the core of the problem, lies in measurement of data, right? Whether do you measure data by gender enough for you to be able to see that this discrepancy lies? And this book talks about how globally, and there are various aspects to where data is not measured, and compensation being one part of it, on how for several years, data has never been released around compensation across genders. And for many large government or private companies, you'll never know whether at the same level, at the same profile, at the same number of years of experience, at the same amount of education background, do men and women get paid the same? And because this data has never been available, this understanding of discrimination has never been available, right? And so it's never been acted upon. So the core of the problem lies in that we don't even want to measure these kind of issues and challenges. And because we don't measure them, we don't fix them. And because we don't want to acknowledge them. And I think for once, some of this is starting to find its way into legislation. But and that's a good thing. But I think from legislation to actual action on the ground will also be something that we as boards, as management, as CEOs have to become sensitive and aware towards, to be able to make the difference, right? And we are building a platform for women called Koto. I can tell you that largely we hire women at most levels, And we have to take a conscious effort to make sure that we pay them slightly ahead of the market for them to be able to come on par or slightly ahead than men. While because the platform itself is for women and stands for women independence and women freedom, right? So I think this is an extremely important issue, and recognition of this issue and then fixing this issue by bringing awareness around it on an ongoing basis will be very, very critical.
No, absolutely, absolutely, Tarun. And in terms of not only, you know, at a legislation level, but also how we are executing, executing this in reality in our day-to-day lives, wherein, you know, we are creating equal opportunities across different levels in the organization hierarchy. Is very important. And this is a good first step for government at least to start tracking and then, you know, subsequently building on this. Thanks, Tarun.
Correct. I think it's very important that the government gets data involved in this as much as possible.
Sure.
Yeah.
Okay, moving on to the definition. The definition part which I would like to highlight is this is the major change which is as per the section 2Y, where they have very clearly stated the exclusion portion in our gross component or in our gross salary, where the exclusion can go up to 50% of the total remuneration of the gross being paid to an employee, and remaining 50% has to be considered as wage, which means the basic wages, which is a basic DA, and retaining allowance. And this is the major hit or the major change which they have brought in under the code on wages. So here in this slide, it is very clear what is substantive, what is inclusive, and what is does not include as a form the part of wage. The wage which they have stated here is a basic DA and retaining allowance, if any. And coming to does not include, which they have stated, bonus payable to under any law or value of house accommodation or contribution paid to the employer, which is the employer share by the employer towards the PF and the pension, and any conveyance allowance or any sum paid to the defray special expenses for the nature. There is a specific reason cited for that particular allowances being paid, and HRA overtime allowances, commission. So these are all allowances have been excluded from the definition of the wage, and remaining the 50% minimum has to be there. In case the exclusion portion, if you are able to justify or classify into 30%, then the 70% is going to be a form part of the wage. So that is very clearly been clarified in the code on wages definition. So this is wage definition which I have stated. And I'll just move on to the next slide, which is related to the sample salary structure, which I have illustrated, and how your salary structure should be in future. Here I have taken basic as a 5,000 as a quantum, and DA has a 2,000, HRA 3,000. HRA very explicitly stated as an exclusion portion. That's when I have mentioned here, even HRA conveyance and washing allowance. Put together, there's a 9,000, which is an exclusion portion, which you have a current salary structure. And basic and DA, where it's not been defined in the existing act, it is not defined how much the quantum should be basic or how much quantum DA should be there. So here I have considered as a 16,000. If person like our salary, existing salary is 16,000, wherein the basic and DA quantum, as I mentioned, as a wage as per the upcoming the code on wages, it should be 50%, wherein it is not meeting here. It is 7,000, wherein the other exclusion portions are 9,000, which is put together 16,000. But wherein we have to rework on our salary structure based on the code on wages, where we have to make it 50% of the wage, which is the 8,000. Like in place of 7,000, it has to be increased. Either we have to take it from conveyance or washing allowance, but minimum basic or DA has to be 8,000 as per the new code definition. So I have illustrated here. So that's when I have increased the quantum here. That's when I have taken, okay, in case if this is how your salary structure, you have to revisit on your salary structure, and you have to revise it as per the code definition, which is being mentioned in the code on wages.
So that means the organizations will have to undergo this kind of a, change in number in their pay elements for the existing pay elements, and ensure that, you know, a certain basic 50% out of that is there, and subsequently the other allowances, so that it not only helps the employees in short term, but also in the in the medium and long term.
Yeah.
Tarun, you would like to add, or can
No,
I move
I was
on?
just saying that I think when I was going through the entire document, one of the things that comes together is that, with increasing transparency, also most of these codes are very employee first.
Yes.
Which will end up, while tax is one component of all of this, right? But which will end up creating a very motivated workforce in the country.
Yes.
Right? And eventually that's what people wanted.
Eventually, yes, they wanted to increase the basic quantum where the many of other related, the deduction maybe which is related to PF or ESIC, maternity benefit, where it has to be benefited more to the employee. So that's when they have very clearly clarified, and which was not there earlier.
Certainly.
Yeah, certainly. Impact on the wages. Now, major financial impact or major financial hit or to the industries, based on the code on wages, is employer liability towards PF, ESIC. Bonus and gratuity may vary. Now, coming to the PF, how it is going to be, the changes are going to be there. Now, for example, take an example of my basic. So out of 1 lakh, my basic is 30. Like I have been considered as 30% from my gross salary, wherein in the code it is going to be 50. Like we have to revise to the 50%. That's when the quantum is going to increase. My basic quantum is going to increase, and that's when again my PF contribution towards the percentage wise it's going to increase. In place of 30,000, my basic is going to be 50. Then the contribution has to be made on the 50%. So this is one major the impact in terms of the financial. And coming to the ESIC wages, the ESIC quantum will reduce because now we are contributing on the total gross salary, which is 21,000. We are going to consider all the gross, like what are the components are there as a gross component we are going to consider for the purpose of the ESIC applicability, wherein now since the wage, the ESIC has to be contributed on the wage, which is 50% of your gross remuneration, ESIC quantum shall come down. ESIC quantum shall come down. However, under PF and ESIC, there is a capping which has been prescribed by each specific act, which is PF under 15,000 is a capping where beyond 15,000, the PF may not be applicable for certain employees based on the provisions. Similarly, ESIC, which is 21,000 and above, whose gross salary is more than 21,000, ESIC may not be applicable. This particular two capping has not been prescribed under the code on wages. They have not specified anything clearly, or they have not stated anything. The code is silent on it. Now the PF department as well as ESIC department has come up with the separate notification to clarify on this, whether they are going to go with the same ceiling or they're going to stick to the wage definition what has been defined, which we have to wait and see until we are going to get the further notification from the department. So coming to gratuity, the gratuity, as I stated, since the basic quantum is increasing, the gratuity payable is also going to be increased. The financial commitment will go up, like could go up. So similarly, we have maternity benefit. Again, maternity benefit being paid to all the employees based on the quantum of the gross, which is the fixed gross being paid to an employee. The maternity benefit being extended, wherein since the wage has been considered for the purpose of eligibility under ESIC or any other related acts, so maternity benefit quantum shall come down or could come down because of the wage has been defined as a 50% of your gross salary. So another impact is on the employee compensation. Currently, the wage ceiling is 15,000. The quantum may vary since it's a 50% of our gross remuneration. The quantum shall vary, and based on that, the employee compensation benefit has to be extended. So these are all the major impact or major hit or every industry has to look into it, and based on that, they have to revise their salary structure based on the code definition. Sumit, you would like to add? Otherwise, I'll move on to the payment of wages. What all changes are going to be there?
No, I think very much the way in which these are financially impacting. It's very clear that in some places the benefits are being rationalized. In some places they are actually increasing. But on the long term view, when we take in terms of benefiting the employees. It's welcome move, not only by the industry, because it's more pertinent for a more motivated workforce, like what Tarun mentioned some time back, but also for the entire employee morale, and for the overall betterment of the society. This will have a major impact. Yeah, Mahesh.
Yes, yes. On to the Payment of Wages Act. So here I have categorized or classified into the change. What is the major change, which I have stated in my earlier slide? 24,000 capping has been removed, and it is going to be applicable for all employees. That's when the procedural compliances, where we have to bring all employees under the ambit of Payment of Wages Act. So the procedural part in terms of returns filing, everything, the act, like we have to cover all employees. So the procedural compliance to be included. And coming to the dial, like they have also defined when to release the payment or when to make the payment to an employee. Daily, they have stated end of the day. End of the day, the salary, like payment has to be made. And weekly, last working of the week, and fortnightly within 2 days after the end of the period. The major change here is related to monthly payment or monthly salary being paid to an employee. The existing is where 1,000 and below employees has to be paid within a seventh a working day or seventh of the subsequent month. Anything which is beyond 1,000, it has to be paid within 10th of the subsequent month or succeeding month. So wherein now they have brought in one the succeeding month, which is within 7th day, irrespective of whatever the numbers, it has to be paid 7th day of the following month. So this is one major change. There wouldn't be any kind of two categorization in future. This is one major change. And another major change which is related to settlement. In section 17 of subsection 2, it is clearly stated the full and final in case of separation, termination, or the resignation from an employee, the full and final settlement has to be made within 2 days of his last working day. So these two major impacts which I would like to highlight in the payment of wages. And coming to the gratuity, there's no as such the change in the Payment of Gratuity Act. The gratuity has to be paid within a month of last working day. So move on to the same payment of wages continues, and there are certain changes also highlighted here. Deduction from wages, in case if there is any deductions are happening from an employee gross quantum perspective, it should not exceed more than 50%. When existing also does 50, and even in the code on wages also prescribed. Only currently in case of cooperative society, which can go up to 75%. And similarly, in case of any advance which has been paid by an employer to employee, and in case if there is any recovery is happening, we have to make sure that 50% of the wage, like it shouldn't be more than 50% of the gross remuneration. And another major change here is reduction for the damages or loss. In case if there is any reductions are happening for the damage or loss done by an employee, so the employer has to give an opportunity to employee and understand from employee whether it was intentional or it is unintentional, what was the cause for damaging the property of the company. Understand from given the opportunity to understand and document it accordingly, the deduction has to happen. This is one major change, and they have very clearly precisely stated that this is how the process has to be there, and employee and employer mutually they have to agree before going for any kind of deduction in terms of damage and loss. Unpaid accumulation, another change in terms of the Payment of Wages Act is the unpaid accumulation which is not paid to an employee for whatsoever reason, where employer can hold. Like again, it differs from state to state. There are states where it is 2 years defined, prescribed, and few states have been prescribed as a 3 years, wherein in the code on wages, it is prescribed that the employer can hold only for 6 months, not beyond 6 months. After the 6 months, this has to be settled to the deputy labor department, like a labor commissioner, where it has to be paid within 15 days of the closure of 6 months, with either through the bank transfer or a DD. So unpaid accumulation cannot be more than 6 months, which has been new clause has been added, or which has been substituted from 3 years or 2 years, where whatever they have stated in the state specific. Can I move on, Sumit, or you would like to add something, Sumit or Tarun, pertaining to the changes in terms of the full and final, or in terms of the wage which has to be paid within 7 days of the succeeding month.
I just think, and I think this is the point I made earlier, and I'm sure Sumit will add to it, is that there is a fair amount of employee protection that's coming in, right?
Yes.
Look at what happened with Kingfisher. Look at what happened with Jet Airways. Look at what happened with many, reputable organizations where employees were just left in the lurch. A lot of people even were left without their provident fund being deposited with the PF office, etc. And there were some of these were private PFs, and so there has been very little employee protection over the years, right? And as some of this happens, if it's not fixed in time, then it gets too far before any action gets taken, and then it's far too gone, right? So from what I can see, some of this, if implemented well and flagged in time, will be very, very effective, which is what has happened with GST, right? That you have to pay GST or service tax earlier within a certain period of time, and and then the compounding effect of that is fairly high, and so compliance became much better in the country.
Yes.
Absolutely. And with this, a lot of internal systems of the organizations will have to be revamped. There's a certain, way of working that the organizations have got used to. And certainly in terms of their calculations, the kind of, exit management, the kind of, the systems that they are integrated with the regulatory systems. So all those things are certainly, will have to be progressed. A good example is the GST, and then with this another set of good positive changes will come in. Certainly, this will be very, very helpful.
The business and the economy will start to mature itself, and use of technology will come in.
Absolutely.
So move on to the next is bonus, the chapter bonus. Chapter very precisely stated, again, the applicability is again given to the state, the empowerment, and they can even reduce the numbers. And the ceiling part, as I've earlier stated, if they can even increase 21,000 to more, maybe 25 or 30, which can be. And one more, the major change is the mode of payment. Only by giving bank credit has to be happened. Bonus has to be paid only by giving bank credit. And disqualification of bonus, section 29D, they have clearly stated conviction for sexual harassment. Current existing any gross misconduct will be considered as or can be deprived. Employee can be deprived from the bonus payable for any gross misconduct, wherein now the conviction for sexual harassment also been added, where the employee can be deprived from paying the bonus for the reason conviction for sexual harassment. So these are all the changes which have been mentioned.
If you see what happened, in India, even globally, there is a very important landmark that happened around Fox News, where the CEO of Fox News in the US was sacked eventually for multiple sexual harassment cases, but was still paid over 100 million in his exit. And I think these are the kind of things that should not happen, because what is the example that you're setting in the workplace, that yes, this person is for sure had a fair amount of misconduct, but we're going to still pay.
Right. Yes. Right. No, absolutely. And we've seen these kinds of things happening in India as well. Plus, this is going to be a very strong message and to any kind of gross misconduct in the corporate and in the working world. So I think this again adds a lot of comfort to a lot of people who are there in the workplace, that their rights, their respect, all that thing is going to be taken care and is going to be mandated by the new rules and regulations.
Yeah, and a film was made on this whole issue. It's called Bombshell. Some of you should see it. It's just precisely the same issue of conviction of for sexual harassment and still getting paid bonus.
Sure.
Definitely, that wouldn't be the case in future.
Yeah.
So they have brought in this particular clause, conviction for sexual harassment. So move on to the equal remuneration. The transgender are also included. Now transgender, when you're engaging the transgender also has to be equally treated. There shouldn't be any discrimination within men, like women and transgender. And the salary, like the remuneration has to be paid equally, and the equal opportunity policy has to be framed. So this is very clearly defined under the Equal Remuneration Act, which is the chapter which has been called under the code on wages. This is equal remuneration has been called as a chapter. Under this chapter, the transgender also been included. So certain major changes on the code on wages specific to labor, contract labor. What are the major changes which they have defined is they have clearly elaborated the specifically include the interstate migrant workmen also they have included under the ambit of contract labor definition. And the term, the contract, the existing, the term or the definition in terms of the contractor is at par with the existing act. There's no much impact on that. And the other one, the contractors rule 55 is principal employer has to ensure, like all this, maybe many of the companies now currently the contractual employee salary being paid from the contractor, post contractor is going to submit the bill and claim it from the principal employer, wherein now that is not going to be the case in the code, where they have stated principal employer has to pay. Ensure before the contractor is going to make the payment, the principal employer has to pay, which is seventh day of the succeeding month. Before that, the principal employer. So this is one thing which employer has to ensure, and he has to adhere to this provision, where they have given the more responsibility to the principal employer, where the contractual employees being worked under the principal employer ambit. So principal employer has to ensure the contractual employees are also going to get the payment within 7th, and there shouldn't be any delay in this. That is the major the reason where they have stated the principal employer has to pay in advance to the contractor, where contractor will not have any concern in paying the salary or to the payment to the contractual employees on or before 7th. This is one major the change. Coming to the bonus to the contract workers, the principal employer is liable to pay minimum bonus in case contractor fails to do so. Though there are certain judgment or certain the judgments are there where they have clearly stated the principal employer is liable, or certain places where there is an ambiguity, wherein in the code on wages very clearly stated in case the contractor fails to pay the bonus, the minimum bonus has to be paid by the principal employer. The responsibility and liability lies with the principal employer. How do we proceed, Sumit? Because we are already 6:45. You want me to move on to the social security code, or can we move on to the question and answer?
No, I think we'll move to the social security code, and then maybe in the last 5 minutes we can then have the questions and answers.
Sure. Coming to the Code on Social Security 2020, I have taken, as I mentioned, there are 9 acts, 9 labor legislation, central legislation have been subsumed, and employee compensation, as I stated in earlier slides. The Employee Provident Fund, what are major changes? Now I have mentioned what is the major changes are Employee Provident Fund. One is coming to the applicability. Now, even under the Employee Provident Fund Miscellaneous Provision Act, where certain establishment, which is defined even in the portal, there are 190 to 200 industries have been classified, that those industries are going to come under the ambit of the Employee Provident Fund. So this particular applicability or the industries specific has been removed. The Employees Provident Fund is going to be applicable for all establishment in future, like once the code is going to get implemented. And coming to no wage ceiling could be prescribed. As of now in the code, they have not prescribed about the ceiling. So then the department, like PF department, has to clarify on the ceiling whether they are going to go with the same ceiling, are they going to lift, which we have to wait and we have to await for the notification from the PF department. Employees whose wages more than the notified wages ceiling shall also be taken into the account. As I mentioned, the quantum where the employees are not having the ceiling, then we have to contribute on the actual basic. So apprentices anyways has been excluded from the definition. Even the existing process, the existing act is also excluded the apprentice. The condition for the exempted establishment, that there are where the industries can go for exemption, where the PF account can be maintained within the company, which is forming a trust. So where there is no as such threshold existing, the currently there is no the threshold, wherein in the code it is specified where you have 100 and more employees, only you can go for exemption. Otherwise, the exemption will not be applicable. The employee, like the industry is having 100 and less employees. ESIC, under PF, we have a voluntary coverage, wherein under ESIC, there is no as such provision, the voluntary coverage. Now, voluntary coverage is also has been introduced under the code, where you can go for ESIC coverage, where you have less than 10 employees in your establishment. And plantation can also go for the voluntary coverage, which is another new clause. And central government can make ESIC applicable through notified, which is related to hazardous. Even if they have one employee, the hazardous way, like hazardous in nature, the industries have to go for ESIC coverage. The wage ceiling, as I stated again, the ESIC has to notify whether they are going to go with the 21 or there could be any changes. Accident while commuting, like any accident occurs while employee is like traveling from his residence to office or office to resident. So there is a clear, like they have given more clarity in it, how to extend the benefit in case of any accident occurs or any accident occurs during the course of employment, how to extend the benefit to the employee. So they have given the more clarity, and they have clearly specified, okay, from this place to this place employee has traveled, then this is going to be considered as the accident as during the course of employment, and benefit is going to be extended accordingly. So the more clarity has been provided under the code on wages. So another one is employer. In case employer is not registered the employees due to whatsoever reason, still employee can go and get the medical benefit or other benefit which is prescribed from the ESIC with available details, probably covering like appointment letter or ID card issued by the company. With this, employee can go and avail the benefit. It is not required to have the ESIC IP, which is the insured person, TIC card, anything. Wherein whatever the benefit has been extended by the ESIC without all this information or all these details, like ESIC department is going to claim, like they are going to recover all this, the benefit which has been extended to employee from the employer. So that's when here this clause is very important. Employer has to generate IP, like he has to bring under all employees, whoever is coming under the ESIC purview, those employees have to be created IP, which is insured person. Number has to be created and the card has to be provided to employee. That's when the employee will get the benefit. In case of any delay or anything as such, then the employer is liable to pay whatever the expenses being incurred by the ESIC department. Mines also to be covered under the ESIC. Mines are not covered under ESIC. Now mines also coming under the ambit of ESIC. So coming to the gratuity, the major change which is for the fixed term workers. Fixed term workers, in case if you are engaging fixed term workers or fixed term employees for the period of 1 year, 2 year or 3 year. So this period, they were not eligible for gratuity, as the gratuity says for 5 years of continuous continuous service, wherein now fixed term employees, in case if they have engaged only for a year and they have after completion of 1 year, the fixed term workers has to be paid gratuity. This is one new changes where employer is liable to pay the gratuity and fixed term employees are going to be eligible for gratuity after completion of their fixed term, which is one more major change. Again, employer shall not be liable to pay the interest for the delay in payment of gratuity in a delay due to the employee fault. In case if there is any fault from employee end where it is not required, in case of delay, like the gratuity, the payable is within 30 days, within 30 days from his last working day. In case if there is any further, maybe because of the employee fault, or in case if there is any the delay has happened from the employee side, then it is not required to pay for those delayed days the interest part from the employer. That is, these two major changes are there. So maternity benefit, again, creche, they have stated very clearly 50 or more, it is going to be applicable, where the creche facility has to be extended to all the women employees, those who have gone on maternity benefit and those who have come back to the company where the creche is applicable, 50 or more. So creche has to be extended. So these are all the major change which is in respect of maternity benefit. And coming to medical bonus, which is in the prenatal or postnatal, has not been extended by the company. The company has to, like the employer has to pay 3,500 as a maternity benefit, medical bonus under the maternity benefit. So this is also has been clearly stated. The appropriate government.
So a lot of provisions for, for crashes and the maternity benefit, which has come in, which were not clear earlier, or which were lesser earlier, right, Mahesh? So
yes,
that's really again a positive move coming in from the government side.
Especially, women at work think a lot of times on what it could do to their career, right? And taking long gaps at work puts them behind in their career advancement. So I think some of these really make sure that they get a level playing field.
Absolutely.
This is related to the appropriate government. I'll skip it. And employee compensation, under employee compensation, the funeral expenses, which is 15,000, 5,000, wherein this has been increased to 15,000. So employee compensation, the funeral, the expenditure is also being increased from 5,000 to 15,000. Employment exchange, currently the applicability for all industries or establishment 25 or more employees, wherein these numbers have been reduced from 25 to 20, and Employment Exchange Act is going to be applicable wherever the industries are having 20 or more employees. So the more number of industries are going to come under the ambit of employment exchange because of the reduction in the number from 25 to 20. And coming to the assessment period, where the PF, even today PF, it is not clarified, or there is no provision that the PF, the assessment can happen only for 2 years or 5 years. Where in ESIC, it is clearly stated the 5 years, the assessment can happen for the 5 years, not beyond 5 years or anything after the completion of the inspection by the authority from the date of completion. Otherwise, 5 years was defined under the ESIC, wherein PF, it is not defined. And in the code on wages, it is clearly stated that PF ESIC inspection can, or assessment can happen for 5 years, not beyond the 5 years. And role of inspector, like the authority, like enforcement cell, which is a social security officer or enforcement officer under PF. So those, like enforcement cell has been mentioned as inspector cum facilitator. So they have to facilitate in terms of whatever the records which are required, very clearly defined and given the roles and responsibility of the inspector cum facilitator, how he has to facilitate the employer and how the employer has to facilitate, clearly defined. And the penalty again differs from violation, the violation and the gravity of the violation done by the employer. So that is very clearly stated. So these are all the related to the assessment, where there are major changes which have come, where we are not having any clarity, especially for the PF. Sometimes what happened now, the company started like existing since 10 years, where under PF, the enforcement cell can have an inspection for the 10 years, where the employers are facing difficulty in terms of producing the records to the inspector, which is related to 10 years or from the date of inception of the code. So these all ambiguity are there today, wherein they have mentioned in the code, it is clearly that you can go with only 5 years, where you can store your records for the 5 years and produce to the authority. So these are all major changes which have been mentioned in the code on social security. But one particular clause which has already been, which is section 142, stating that Aadhaar is mandatory, which is already been brought in under the PF, where this particular clause is already existing and it's applicable for all establishment.
Sure. Thanks, Mesh. I think Tarun, we'll have your views on this topic and before we conclude.
No, I think Sumit, we made some very pertinent points through the conversation about how most of these codes will lead to far more employee safety, whether it is physical safety, and I think some of the points that they've made about hazardous elements and all of that are very, very important. but also about making sure that they have social security, they have wages in time, there is accountability by organizations and employers to be able to make sure that they pay people in time. And also building a better workplace. So better workplace for women, better workplace against sexual harassment, better workplace for making sure that there are good maternity benefits in play. And there is at least a starting point of making sure that there is, a conversation and thinking around gender equality, and making sure there's equal pay. I think the next step will be, obviously, one will be a compliance, which I think the government will do a good job, but also, making sure there is voluntary release of data from large organizations around issues like gender pay, etc. Right? When organizations are compelled or at least socially encouraged to be able to release reports like they do on other aspects like CSR, etc., around what they pay men and women in same roles, same jobs, same experiences, etc. A certain amount of name and shame at one end, and encouragement on the other will happen to set some of these discrepancies systemically right.
Sure, absolutely, Tarun, absolutely. This is very much the need of an hour, and certainly, we've been living with these so-called rules for last pre-independence times, and we, all of us, are hoping that very soon these laws will be implemented, and pretty much this will have a lot of impact on the policies and also the execution of the policies that we are following as an organization. So with this, I would thank you, Tarun, for taking out time for this webinar. Thank you so much. Thanks, Mahesh. Thanks to all our participants and the organizers. I look forward to very exciting webinars in the near future. Thank you.
Thank you.